Namaskar and good morning. I am Vijayamohan, back with you again with another reasonably good company. The name of the company is Gujarat Fluoro Chemicals Limited. It was incorporated in 2018 and was earlier known as Inox Fluoro Chemicals Limited. Obviously, it is a part of the Inox group of companies. It is headed by Vivek Kumar Jain, Managing Director, Devendra Kumar Jain, Chairman. So it's a leading producer of fluoropolymers, fluoro specialties, chemicals and refrigerants. It's one of the top five global players in fluoropolymers. Exports to Europe, America, Japan, and Asia. So a lot of products are there. Company is the only PTFE fluoropolymer manufacturer in India, a major supplier to Europe and USA. There are many other things that it is producing, including refrigerants, chemicals, a lot of chemicals like caustic soda, carbon tetrachloride, chlorine, etc. All these are being produced. So it is used, some of the products are used in the latest electric vehicles also, solar panels also, hydrogen fuel cells, electrolyzers and electrical batteries. The company has a manufacturing complex at Dahej for fluoropolymers and chemicals. Another one at Ranjit Nagar for fluoro specialty chemicals. Another one in Morocco for fluorosphere mining and beneficiation. So it has been producing good results. It is manufacturing caustic soda, chloromethanes, fluoropolymers, PTFE. All of them are running at full capacity, and a new fluoropolymer is running at 65% capacity. It will also reach 100%. Maybe by this time it might have reached. For specialty chemicals, capacity utilization has been low for pharma related intermediates, etc. But it is expected to go up to normalcy by the end of FY 2022 or beginning of FY 23. So what are the end user industries? Oil and gas, printing inks, semiconductors, chemical processing, wires and cables, automotive, agrochemicals, pharmaceutical intermediates, textiles, solvent pharma, air conditioners, and so many other industries. It has got sales and distribution network not only in India. It has got in America, European Union, UK, and so on. South Africa, Thailand, China, Korea, Taiwan, India, Japan, so many countries. So sales and distribution network is very strong, and it may improve further also. 51% of revenue is of course generated from domestic market. Refrigerant gases 10%, caustic soda 17%, chloromethane 24%, tetrafluoroethylene 20%, other products 27%, and so on. So 51% domestic means 49% foreign market. Not bad, but foreign market may improve further also. So we'll be watching that. Now the company has been incurring a lot of capex for expanding its facilities in bulk and specialty chemicals, fluoropolymers, agri products, new age products, and so on. Now in 2022, FY 22, it spent around 600 crores on capex. In 2023, that is FI, 900 crores. In FY 2024, it wants to spend 1000 crores. So how is the market condition? Market condition is very good, and it's also growing, like electric vehicles, renewable energy, etc. Future outlook is very good. Demand is growing, and capacity also is growing. So it is good for the future also. Now Q1 23 highlights. We will see a little more details later. Consolidated revenue for Q1 only for the latest quarter is 1,334 crores, up by 46% year on year. EBITDA, consolidated EBITDA for Q1 is 459 crores, up by 80% year on year. EBITDA margins are 34% against 28% last year. Profit after tax is 303 crores, which is up by an impressive 101%. That is why I have selected this company for my review. ROCE and ROE are also very good, 35.3% and 27.7%. It continues to expand. See, at this level of ROE, ROCE, EBITDA margin, etc., it continues to expand and commercialize additional capacity for new fluoropolymers. New projects are going on as per schedule. Its market cap is around 38,993 crores, say 39,000 crores. Current price is around 3,550 rupees. The 52-week high is 3,700. Therefore, it is very near to the 52-week high. Stock price earning is a little high at 42, but in this comparable market, 42, there are many companies which are above 42. So stock PE also seems to be okay. Book value is 387. Dividend yield is very low, 0.11% only. Face value is rupees 1. Now, company is expected to perform well in the coming quarters, but stock is trading at 9.16 times of its book value, which is high. But in this, as I said, in this line, there are many other companies which are far ahead of Gujarat Fluoro Chemicals. Return on equity is very low in the last 3 years, but now it is improving. Now let us see a few items in the last 5 quarters. Sales have gone up from 840 crores to 912 crores to 964 crores to 1004 crores to 1074 crores to 1334 crores in Q1 of latest year. Last Q1 912, before that 840 actually, now 1334 crores. So sales improvement is gradual, steady, consistent, and very good in the latest quarter. Net profit has gone up from 110 crores to 303 crores. 101 crores in Q4 of last year, then 151 crores in Q1 of last year. So it was going on like that, and latest is 303. Very impressive. So last 5 quarters results, sales is impressive, sales progression is impressive, net profit progression also is very, very impressive. EPS also from 10 to 28, it has gone up, it is very good. Now let us see the last 4 years. Sales has gone up from 2,729 in FY19 to 2,606 next year, 2,650 next year, and last year 3,954, and trailing 12 months 4,376. Very impressive. Net profit is 928. EPS is 35. That is last 4 years. That is also impressive. So last 4-5 years impressive performance. Last 5 quarters also is impressive performance. Sales growth trailing 12 months is 46%. That is impressive. It is picking up speed now. It is finishing all its expansion schemes gradually and steadily. Therefore, it is growing. Sales growth is there. Profit growth also is trailing 12 months 763%. Very high, very whooping. CAGR also last 1 year 108%. Return on equity used to be low, but last year it was 20%, which is good. Now, if you look at balance sheet, especially borrowings have increased 968 crores in FY19, 1700 crores in FY20, 1600 crores in FY21, and 1556 crores in FY22. Cash flows are improving, not bad, but cash from operating activity is increasing, but cash from investing activity, obviously it will be a minus figure because they are investing heavily. Cash from financing activity also is a negative thing. Net cash flow is 14. Now, overall, you can say they are managing their cash flow well. They are taking a little bit of loans also, but not very high, but it's okay. Now, debtor days have come down to 72 from last year to before year 92, last year 72. So, impressive decrease. Inventory days also likewise from 404 in FY21 to 314 only in FY22. Days payable from 202 days to 170 days come down. Cash conversion cycle also has come down from 294 days to 216 days. Working capital days also has come down from 171 days to 137 days. ROCE has gone up 11% to 20%. Impressive. Ratios are impressive. Shareholding pattern, if you look at that, last 2 years it was at 66.08. Earlier, 5 years back it was 68, but now consistently 66.08. FIA is 4.1%, DIA is 4.25%, public 25.57. Okay, many plants are running at full capacity. One plant is running at 65% capacity, we have seen already. Prices are increasing, therefore profits are also increasing. So overall, the performance of Gujarat fluorochemicals is quite good. There are so many factors that we can see, I can tell you, but we need not go into all those things. Entry barriers are somewhat rigid because technical know-how is not easily available. Raw material availability, you have to have approvals from raw material suppliers, customer validation, approvals and qualification. All these things are there. These are all acting as entry barriers. Growth potential is quite huge. Every year there will be growth in the consumption of its products. Therefore, sales are assured. So, GFL, Gujarat Fluorochemicals Limited, has got a wonderful set of customers and a wonderful set of raw material suppliers. There is no problem at either this end or at the other end. Manufacturing capacities are being utilized in full, 100%, mostly 165%. But the capacities are being expanded continuously, which means the company is going to grow. If it is going to grow, investors will also gain. As always, I won't say you buy, I will say you examine. You listen to it twice or thrice, etc. I have given you most important points. That is there. But always, when you put your money, it is your money. You have to safeguard it. So every quarterly results at least you should see. So that is an important thing that you will have to do. Quarterly results you must see if you have invested. And as always, I tell you, portfolio management. Minimum you spread over 10 company shares. 15 also is okay. 10 minimum. Hmm? So that saves you from unexpected problems. However good you are in picking your companies, yet out of 10, 8 will do very well, 2 may not do very well. They may even run in loss. Still, 8 out of 10 means 80%. See, it is an impressive figure. You will make very good money. Our overall motto is we must earn money. We must become millionaires, crorepati's, billionaires. For that, don't get attached sentimentally to any company. If a company does well, keep it. If a company does not do well, give it up. That is, wait for 2-3 quarters. If a company does not perform well for 3 quarters, my policy is it goes. I will go for a good one. Thank you for listening to me. I will be back with you with another good company. But please remember, portfolio management is necessary. You can't put your whole money into 1 or 2 companies. No. You must put into at least 10 companies. Then you are safe. Approximately equally. Then you go on checking every quarterly results. Companies which are performing very well, you increase their share a little. Companies which are not performing very well, their share will automatically go down. Thank you for listening. As I said, you examine it at your end, take your decisions. That's always necessary for any investor. Be a long-term investor. Thank you.